Welcome to all our guests who are listening to us, and welcome to Ellex webinar regarding the Baltic M&A Monitor 2024. Ellex has been doing this monitor since 2010, as I was remembered, so next year we will have a small jubileum. The monitor has a year 2024, although it will be talking, of course, as a summary about the 2023, but we will also take a small glance into 2024 to the extent we have forecasts, and then we can maybe next year see whether the forecasts have materialized or not. The agenda, as it is a tradition, we will have first an overview of the Baltics as a general and how we look in comparison to Europe. That will be presented by Agnė Mažeikė, Baltic Correspondent of Mergermarket. Then we will have country reports regarding Estonia, Latvia, Lithuania, presented by Estonia by Sven Papp, that is myself, and Latvia, Raimonds Slaidiņš, and Lithuania, Robertas Čiočys. And thereafter, we will take a look into 2024 and share our views and forecasts regarding that. A few housekeeping rules before we start as well. The session will be recorded. Unfortunately, well, you participants, while asking questions, you cannot do it live. You have to do it in chat, so you don't need to worry about what will be recorded and how it will look like. After the webinar, we will send to all registered participants the recording, the Baltic M&A Monitor 2024, as well as the slides that you will see during the webinar. And well, without any further ado, I will ask Agnė to present the Baltic view and how we look in comparison to Europe.
Thank you, Sven. Good morning, everyone. Actually, I will start today from the global M&A statistics and trends. So first slide, please. In 2023, global M&A dropped to its lowest level in 10 years by deal value. Take any region on this map and it's in red, aside from Japan. The darker the shade, the better year it was, according to this map. What's not on this map, but worth adding, that in Europe, Norway and Belgium were the only two countries with higher deal values year on year in 23. Staying with global figures for a while longer, there is a table on the next slide showing that the number of deals in 23 fell to north of 34,000 globally, which is the lowest level since 2005, although rather close to 2013. What's encouraging that the final 3 months of 23 showed signs of a rebound, with confidence somewhat restored regarding the economy's soft landing, especially in the US, which generated around half of the deal activity last year. 5 of the top 10 deals worldwide were announced in the final quarter. The top 2 were USD 60 billion plus deals by American oil majors ExxonMobil and Chevron, aimed at securing hydrocarbon assets. This perhaps somewhat counterintuitive given the EU's goal to net zero, but self-explanatory given the decline of large international oil field discoveries in recent years and forced exits from Russian oil and gas properties. This slide also lists key findings from the Mergermarket and Norton Rose Fulbright report based on globally surveyed corporate executives, large private equity firms, and biggest investment banks. And they indicate that deal makers globally are broadly optimistic, with more than half expecting their deal activity to increase in the next 12 months. The main factors behind it include industry consolidation, the growth of new products and services, alongside ongoing pursuit for digital transformation. Now, looking at deal financing, there are significant differences between global regions, with financing in Europe expected to be a particular challenge in 24, where 62% of polled believe that accessing M&A financing will be more difficult compared to 23. In general, polled deal makers are looking to tap into a wider set of financing sources than ever before, but majority are planning to use two options. One is private debt, and second is cash reserves. And these are the main forms for deal financing in the next 12 months. Private debt, described as loans provided to companies by private funds rather than banks or public markets, has soared in popularity since early 23. And the Baltic example here would be Air Baltic, which said that it will look at this option in an effort to refinance bond ahead of an IPO. Now, despite this cautious optimism, 2024 is not without a variety of obstacles for M&A. Here, stricter regulatory environments, especially antitrust-related, are seen as the #1 deal blocker globally. In Europe, however, the stricter regulatory environment comes as a top second obstacle for deal making this year, after the lack and increased cost of financing, which was already mentioned. Local economic risks and uncertainty, including inflation and interest rates, is the top third M&A obstacle in Europe, followed by geopolitical risks and uncertainty, a factor which also includes elections. Now, sector-wise, technology is expected to see the highest growth in cross-border M&A activity in 24, followed by life sciences and healthcare, and industrials in top second and third positions globally. Artificial intelligence has become the hottest topic in tech, with a third of respondents looking to acquire an AI business. And this proportion rises to 54%, so more than half among private equity funds. So with stiff competition for a limited number of high-quality AI-related targets can be expected to inflate valuations for such deals in 24. Next slide, please. So this slide is on the sector heat chart, which is based on Mergermarket reporting on companies for sale globally. It correlates with sector activity trends expected for 24 based on the poll findings from the previous slide. Although looking at Europe, Middle East, Africa, consumer sector seems to generate more activity than pharmaceuticals or biotech. For comparison, in 23, the most active sectors by deal value globally were technology, 17% of total deal value, followed by healthcare, 14%. Then came finance, 7% of global deal value, and utility and energy, also 7% of total deal value. Next slide, please. Looking at Mergermarket stats for Europe, Middle East, and Africa more closely is a rather similar picture to the global downward trend. So 30% down by value, 17% by deal count year on year. And you know how the story goes. So Russia's war in Ukraine in early 22 triggered energy shock. This in turn led to inflation. Central banks ramped up interest rates to remove demand out of the economy. Suddenly, sponsors found it harder to finance deals. So this turbulence in the debt markets meant that private equity buyout activity was 44% down year on year by deal value, coming in at the lowest level since 2016. Exits also stood at a decade low. However, with inflation responding to central banks' measures, the deal activity in general is expected to regain momentum in 24 in the EMEA region. One other thing to add is that speaking of private equity activities, there seems to be a renewed push for liquidity from limited partners, which is driving a potential rebound in private equity-related M&A. And this is an insight from a recent deal-making conference in France. Nonetheless, the pure M&A deals are expected to go alongside other liquidity solutions, including continuation funds, minority stake sales, also LP-led secondaries, for example. Next slide, please. So staying with European trends, let's look at two sector charts. The one on the left is on European TMT sector, and the second is from our sister publication InfraLogic and provides an insight to European renewable deals. TMT has been the most active European sector by deal value last year, followed by industrials and chemicals in the top second position and energy mining utilities in the top third, which also includes the subsector of renewables. Both charts demonstrate a slowdown last year in comparison to 22, well, again, affected by macroeconomic uncertainty, geopolitics, restricted debt markets. Sector-focused Mergermarket transporter publications suggested in early January that both TMT and energy sectors are likely to bounce back to activity this year, partly because of globally stabilized macroeconomics, partly because of pressure to financial investors to deploy capital, and the expectation that strategics cannot postpone deals indefinitely. Now, TMT activity in Europe is to be driven primarily by corporate non-core disposals, asset sales, and portfolio optimization with a view of helping to reduce leverage and simplify business models. Now, renewable sector deals in Europe continue to be driven by net zero goals, with infrastructure investors among key players focused on such investments in the region. In a wider energy sector, however, district heating remains high on investors' agenda, plus some large cap deals are coming up in fossil fuels in Europe this year. One other note is that nuclear energy topic seems to be coming back on investors' radars thanks to new technologies and renewed governmental financing in countries such as France, and this is probably interesting for Estonian market, which has its own discussion on nuclear energy ongoing. And the last slide, please, for me. So to conclude this overview, the Baltic M&A stats in 23 seems to be in line with global trends, although the deal count drop does not seem too dramatic year on year of 12%. In addition, it was lower compared to deal count drop in Central Eastern Europe of 22% last year. Baltic deal value drop by 54% was rather steep, especially compared to 13% deal value drop in Central Eastern Europe, but it only takes into account disclosed deal values. Now, reflecting the decline in the global private equity markets, only 20 private equity deals targeting Baltic companies were announced in 23, which is down by half year on year. Now, the top 10 Baltic M&A deals in 2023 somewhat reflect the regional M&A trends by sector, which shows that TMT dominated by deal count and value in the Baltics in 2022 and 2023, followed by energy, mining, and utilities, especially by deal count, and industrials and chemicals in the top third position. And with this, I will conclude and hand over to the Ellex team to discuss those trends in more detail.
Yes, thank you, Agnė. Well, now the country reports, and let's start with Estonia. I will continue from the Mergermarket slides regarding the past years, 15 years on your screen, and we can clearly see the decline since the record year 21 by deal count as well as the one of the top years with the deal value. As we can see in 2008, that was the financial crisis year. Estonia recovered next year, 2009, quite nicely, but then there was a period of 5-6 years, well, not really demonstrating any significant growth. 2018, from that slide, the peak is the year of the Luminor, as we say, and that meant that half of the deal value was actually contributed to one deal. 1 billion was the acquisition value of the 60% of Luminor at that time. 2019, well, when COVID started, again, decline. And 2021, that was the year of Granul Invest, which contributed a significant, at least in the deal value. And then 21 was the really the record year, both the deal values and the deal numbers. But unfortunately, since then, we have witnessed a decline in 2022 and also continuing in 2023. And as Agnė already mentioned, on a global scale, well, we can also say that unfortunately the deal value-wise, it takes us the result of 2023 takes us back to 2013 almost. Which is a significant decline, of course. Can we put on the next slide, please? 2023 regarding Estonia in a nutshell, Estonia economy shrank by 2.3%. Inflation was running rather high on a full year basis at 10%. Out of the 134 Baltic deals recorded by Mergermarket, Estonia scored 49 deals worth roughly $500 million, and that was by deal count down 17% from 59 deals counted in the previous year, that is 22, and by deal value 68% from 1.4 billion announced in 2022 down to $500 million. Well, Estonia should take a pride for 2023 as well, small things, but not insignificant. 6 out of the top 10 Baltic deals recorded by Mergermarket in 2023 had Estonian involvement. I will come back to the deals on the next slide, but yeah, 6 out of 10. And we are, of course, extremely proud that the number 1 deal by deal value was had Estonian involvement. And the deal value was not maybe one of the top ones that we have seen over the years, but still 120 million, quite significant amount. Next slide, please. Yeah, and those 6 deals among the 10 largest deals in the Baltics in 2023. Infortar and Eesti Gas acquired Gaso AS in Latvia, and as said, that was the 120 million acquisition, which was the top deal of the year in 2023. Skeleton Technologies attracted further capital. The amounts were in such significance that actually it was not a mere capital raising rounds, but it was considered to be acquisitions, not 100%, but still acquisitions. And they had 2 rounds, one 108 million and another 50 million. And the main investors were Siemens, Marubeni, and others. Elcogen, well, also one of our startups, although being around for almost 20 years. So whether that still qualifies as a startup is a question. But anyhow, they managed to raise 45 million. And again, the same story, since it was acquisition of a significant stake, it was not a mere financing round, but an acquisition by Korean shipping and offshore engineering. Hole, well, maybe not a household name, that is a producer of different pipes and pipings and related products. And Hohle was acquired for the value of 39 million by Aptiv and Hellermann. And the last one, Active Finance Group, acquired in all 3 Baltic countries Intrum companies, and the acquisition value was 30 million. So, next slide, please. Startups. Well, Estonia, of course, famous for its unicorns and the strong startup sector. In 2023, it was not an easy year for startups, as we all know. Startups were struggling to find funding, and a number of them had to resort to layoffs. And we also saw the review of valuation, as the funds, which are so essential for the generating growth, dried up. The sector-wise in startup, TMT is obviously topping the investment list, and that is the same as throughout the world. Maybe the new trend is that the trend has shifted more from fintech to deep tech, green tech, clean tech. Well, anyhow, it's a tech sector. And then you can see on the list, I will not read it out loud, the most significant capital raisings in the startup sector. Next slide, please. Well, we usually talk about capital markets as well. 2023 was not the year comparable to 2021, when we had the record listings. Most of them, of course, on the First North, the alternative market, but nevertheless, last year we are proud to still note that we had one IPO, and that was the only one in the Baltic market. Infortar managed to materialize to make it happen, their IPO, which has been under preparation for quite some time. And well, some statistics around it, some 5,500 investors oversubscribed the issue by 1.3 times, making it a successful IPO. Bond market was actually rather active. We listed the 3 largest bond issues that were taken to the market, and all of them were heavily oversubscribed. Of course, that the main reason probably being that after years and years of non-interest bearing, or rather very low interest bearing instruments, bonds have increased the interests, and that is of course corresponding to the general interest rates that we have seen increasing throughout the world, actually. Well, anyhow, LHV issued bonds for 25 million, heavily oversubscribed. Investors subscribed for 407.5 million. InBank wanted to raise 6 million. Investors subscribed for 46. Big Bank issued bonds for 3 million, and the investors subscribed for 21.6. Tallinn Stock Exchange witnessed also the first bankruptcy, and to my very best knowledge, the only one so far on the stock exchange. Hagen Bikes, which was listed in December 2021, so that was the year when Estonia had some 20 IPOs. Hagen Bikes was one of them. Investors oversubscribed the issue by 14.9 times. The company promised to sell over 10,000 cargo bikes per annum. Well, the actual sales actually ended up being 70 in 21 and 113 in 2022. So big hopes, but well, did not materialize and did not work out as the company expected. And well, all that ended in a bankruptcy, which was declared in December last year. We also saw one delisting, Clevon, the manufacturer of driverless delivery vehicles. These are not to be confused with the Starship vehicles, these robots, small robots on the streets in Estonia and in many other countries in the world. These Clevon is producing a larger vehicles. And they ran into problems to raise capital after listing, and the way they wanted to raise capital, actually the private equity funds were not very favorably looking at the listings, and they decided to delist. So next slide, I believe. Yeah, now it's time for Latvia. Raimonds, the floor is yours.
Okay, Sven, thank you very much for that comprehensive view of Estonia and the situation in Estonia. With regard to Latvia, we'll start also with the Mergermarket slide that you see before you. And to a certain extent, the trends are similar to the Estonian market. From the slump in 2009, the financial crisis that we all went through, you can see that the deal count and volumes, of course, are very low. And then things picked up pretty evenly after that and stayed pretty steady up until the COVID. And of course, we had a bit of a downswing initially during the COVID year. And then, of course, as the rest of the world and Europe also had a huge upswing as far as transactions are concerned in 2021. It was just a record year. Nobody expected it. And so that's sort of set the stage for the way we view things coming off of that record year, in the sense that 2022 was a drop in Latvia from that record year. You can see in terms of the number of deals as well as the value. Excuse me. And now we've had a little bit of an upswing in 2023 for Latvia, going a little bit against the trend, I guess. We're still below the record year of COVID, but these 3 years after, beginning with 2021, you can see are all still, heads and tails above the years preceding, both in terms of deal numbers of deal volume, and deal value. So, the positive indication here in Latvia is for last year, the overall picture as far as transactions is concerned is that we've gone up a bit from 2022 in both the number of deals and the value of deals, and are still, quite above the at least the number of deals that we've seen in years prior to 2021. Okay, next slide, please. The statistics for last year for Latvia, again, we had this bit of an upswing to 27 deals, which totaled 351 million euros in value. Again, as we noted from the previous chart, transaction amounts have increased by 17%, and the amount of transactions has increased 27% from 2022. I must note, though, that we're still below our colleagues in Estonia and Lithuania in terms of number of deals, which has been a trend over the last years. We're doing our best to up this number, where we have that competitive instinct that we need to get these deals up. I know that the Latvian government has been looking at this, the Foreign Investor Council in Latvia. What are the reasons for Latvia having a smaller amount of transactions over the last years? But we've increased. Hopefully, the increase will continue heading into next year as well. As a percentage of Baltic transactions, what's noted here is we've grown, again, we've grown a bit from 15% to 20%, but again, that's 20% of the Baltic market is the Latvia total. And this is our highest share of the Baltic transaction market since 2018. So again, in a sense, it's positive, but we feel there's a lot more to be done to at least keep up with our colleagues in Estonia and Lithuania. Okay, next slide, please. The interesting thing is that the 3 Latvian deals in the Baltic top 10, we had 3 deals there. And in fact, I'll note in the next slides that actually we have the 2 top deals really out of the top 10. But out of the 3 top deals, the 3 Latvian deals that are in the Baltic top 10, they all involved domestic, meaning Baltic buyers, which is interesting because it fits the Baltic trend as domestic transactions, Baltic transactions, that means, have outnumbered inbound transactions for the last 5 years, with the aggregate deal value of domestic transactions, again, these are Baltic transactions, increasing substantially from 18% in 2021, that was that record year after COVID, to 23% in 2022, and now last year, 41%. So it's interesting, yeah, that we're doing more and more domestic deals that within the top categories of deals. Of course, the big mega deals usually are deals that involve foreign investors buying strategic assets or private equity doing big deals in the Baltics, but those are a bit more few and far between. Okay, next slide, please. Yeah, and here we're looking at the 2 top transactions for 2023 in Latvia and also in the Baltics. One is the one that Sven has already mentioned. It does have a Estonian component because the purchaser was the Estonian energy company Eesti Gaas, which is owned by Infrator, as mentioned by Sven. And they purchased Gaso from Latvia's Gas, the Latvian gas company here. So that was the top deal, the 120 million euro deal. And the other one, the second largest deal in the Baltics, also in Latvia, of course, also involved Latvia's Gas. So a lot of activity around the gas company here in Latvia for various reasons. And this was a management buyout of one of the shareholders in Latvia's Gas, Mergermarket, which is a Luxembourg-based investment fund, generally investing in infrastructure. They sold off their shares to management, to Latvia's Gaz's management. And we're looking to see, if there could be further transactions around Latvia's Gaz as well moving forward. Next slide, please. Well, and what else we've seen? We have seen a bit of activity in various different sectors. We have financial sector activity. Again, looking at 2023 in Latvia, Signet Bank acquired LPB Bank, having fintech aspirations with regard to this transaction. And we also had an IPO in Latvia last year in the financial sector. This was Indexo, which is a pension management company. It successfully had an oversubscribed IPO last year as well, with plans to establish a Latvian bank, which we've understood are moving forward, getting close to getting a license from the Latvian bank and European bank. We also have tech activity in Latvia, of course. Aronis is one of note, which secured 28 million euros from a group of investors, including France's Future Positive Capital. Aronis is a success story here in Latvia. It's a service company to wind energy, where they provide robots essentially that clean the wind turbines. They're doing quite well, certainly with regard to fundraising and their business activities. And the health sector has also been relatively active with, let's say, relatively minor transactions, but still activity nonetheless, we had a Baltcap company acquiring a senior care company, Senior Baltic, from the French Orpea here in Latvia as well last year. Okay, next slide. With getting into Lithuania, I guess I can also mention quickly before we get into Lithuania, and I give Robertas the chance to speak, is that again, a few other deals to mention are worth noting again with regard to the trend of Baltic buyers. We also had a relatively good-sized transaction whereby the Estonian pellet manufacturer Warmiston purchased a cogeneration plant and a pellet manufacturing facility in Vuosaari from Enefit Green. So again, Estonian participants in this transaction, but that was a 32 billion euro transaction last year. And we had several bonds, successful bonds last year. We had Amber Group, 30 million euro bond with the idea of building additional infrastructure, warehousing. Storant Holdings had a 10.5 million euro bond, and Eco Baltia also had a 10 million euro bond. So yeah, pretty active bond market as well last year. Okay, with that then, that's it for the initial view of Latvia, and I'll pass the microphone over to Robertas.
Thank you, Raimonds. I will cover for Lithuania. As my colleagues, I will start with a 15-year trend because it is sometimes worthwhile to look historically what happened, and what we see actually that it has always been the case that M&A market is cyclical in Baltic states. And my spot on this is that if you take a look at peaks, both deal value-wise and deal volume-wise, it is always so that in between two record years, there usually are 2 or 3 years of a decline. So it's usually 2 or 3 year gap in between two peaks. And looking to the 15 years, since the year 2018, it seems that we had an exception from this trend, because each year volume-wise has been a new record year for M&A activity in Lithuania, with the highest peak obviously being the years 2021 and 2022, which were COVID years. So it is natural that after 5 years, of new records and 5 years of a number of deals being a record year, we had a short decline. And of course, it is linked to increase in interest rates, but there is always a reason behind the cycle, and it's quite natural that we are having probably a down cycle at the moment. I will ask to turn to next slide. If we look to the Baltics overall, so Lithuania accounted for 43 of all the transactions among the Baltic states. So we are roughly half of the economy of the Baltic states, and we are sharing roughly half of the deals. So statistically, we are consistent in a way. Lithuania generated 58 deals recognized by Mergermarket in 2023, and compared to 2022, we had like 17 deals, so minus 12 deals. So the decrease is not dramatic, and well, it looks better in a way than a global trend where we see that around 30% decrease in deal volume. If we look to the historic years, so still the number 58 deals in the year 2023, it is much more. It's almost double the number of deals in 2022. So we are still, in a year 2021 level. Top sectors by volume were energy, mining, and utilities as a class of Mergermarket, but We do not have a large mining businesses in Lithuania, so when we look to this line, we refer to mostly renewable energy transactions, and out of these mostly wind energy projects and utilities companies, because we see that private equity companies are consolidating utilities market in the Baltics. In the second place were industrials and chemicals, and again out of this category it is clear that industrials were the major part of these, and number 3 is TMT. And I will turn to next slide now. Interestingly, out of the Lithuanian transactions contributed to top 10 Baltic deals list, all 3 related to venture capital. And it used to be Estonia as a capital of unicorns and venture capital investment, but this year was exceptional for Lithuania. We had Nord Security, which is a cyber security and internet solutions company, raising capital of $100 million, and the deal valued Nord Security at 3 billion euros. So it's triple unicorn. The major investor was Warburg Pincus. So you can see that geographically venture capital money still comes from United States. The second largest deal recognized by Mergermarket was also venture capital investment into PVKs. PVKs is a IT company engaged in design of software dedicated for solar plant projects. So it is a company servicing renewable energy industry, and they raised also around $100 million from US venture capital funds, namely Highland Capital, Energize Ventures, and Elephant Partners. And the third one, actually much smaller compared to Nord Security and PVKs, is Furniture One. It is a e-commerce company selling furniture, and the transaction involved a management buyout of 20% stake from Swedish BHG Group. And I will move to the next slide. And the next slide, please. One more slide. Thanks. Market highlights. What are other interesting things happened in Lithuania, and what I wanted to discuss is that we have Taiwanese investments. We have Taiwania Capital, which is a investor of Taiwanese money, and they have started investments in Lithuania, and Taiwanese money looks for deep tech companies. So currently they invested into one laser company in Lithuania, and the second one is AI company engaged in radiology research. So there is a new flow of money, a new market player, and well, the deep tech and related companies are looking forward to attract more monies, and hopefully the pipeline will follow for the next year. Also in 2023, we had a launch tender for an offshore wind park in the Baltic Sea, which was won by our national energy company Ignitis alongside the Spain-based Ocean Winds. So this is a clearly largest joint venture transaction, and if the project goes, so it will be a 100 million worth JV company. Well, and the latest of interesting news that reached us during the last year is that Luminor Bank is put up for sale, and the current shareholder is Blackstone, a US private equity fund. Back in 2018, Blackstone acquired 60% stake in Luminor and further increased the stake to 80%. So now 6 years already have passed from the investment, and the rumors say that Blackstone are looking for the buyer for Luminor. And next slide, please. And with that, I will give the floor back to Sven with the market expectations for the Baltics and Estonia.
Yes, actually, now we have covered 2023, and Robertas has taken us a little bit into 2024 as well, as with the well, so far the news from Bloomberg's and otherwise speculations of the greatest deal, hopefully in 2024, but okay, if it's not 2024, then it will be at some point. Blackstone exiting Luminor. As said, at the moment, Blackstone has denied all these rumors, but the source is Bloomberg, so a respectable source. Let's see how that will develop. And as we have seen from the earlier years, the Baltic markets are, of course, rather small compared to the global ones. So one deal can really change the value-wise the picture completely. And Luminor deal will be, of course, the deal of such a magnitude. But looking into the future, what is ahead in 2024? Maybe, Robertas, if we start with the next slide regarding, I believe that is...
okay, yeah, it's Lithuanian market. Yes, okay, Lithuania. Yeah. So now we switch order. Okay, so what to expect for 2024? Well, our expectation is that the renewables sector will remain active, since we have a lot of wind energy projects at different stages. So there is one part of investors who are doing land works and then on selling the project to the developers. Then we have several projects in the development stage, and it is likely that those who are engaged in development will be ready to sell the assets once they are fully commissioned. Probably there will be less interest on solar, but on wind energy we see that interest remains. The second trend expected is that private equity funds will start exiting matured investments in Lithuania. So it's difficult to go sector by sector because private equity in the Baltics, they have acquired companies along a very, very widespread area, and it encompasses healthcare companies, consumer companies, e-commerce, utilities, etc. So we feel that that there are several processes started where the NDAs are being signed and where the bidders are starting to look into the info memos for the PE portfolio companies, and we'll see how it goes and how many transactions will be closed. Another trend is that we will see probably the growth through acquisitions by strong regional players, since we see that the market is being consolidated, and both strategic players are looking to invest and to acquire side businesses or make other add-on acquisitions. But we also see private equity companies after the first acquisition being very active in add-on market, let's say in the sectors of pet care, healthcare, recycling, and related. Another trend is that on the buy side, we expect that regional and local private equity funds will use the situation to acquire companies for the reason that the European and global private equity players are less active during the last couple of years. The trend previous to that was that if a London-based fund comes to acquire a Lithuanian company, most likely they would outbid all the local and regional players, and the valuation would be very high. And I think the transaction which illustrates that trend is Baltic Classifieds Group, because once the London player comes here, so basically probably there is no opportunity, or there is less opportunity for the local PE funds to acquire. If we look to venture capital investments, it is unlikely that we will have another unicorn this year or next year, but there are successful companies which may be valued in the level of hundreds of millions euros. And out of these, we think that a company, TransferGo, will be able to attract a new investment with a good valuation. And Ovocom is a e-commerce company for the traders of second-hand car parts. So Lithuanians are very well known as a very good traders of second-hand cars, but it was like in a market, and now it's like e-commerce based parts trading.
Okay, Robertas, thank you for sharing the insights regarding Lithuania into 2024. Raimonds, what about Latvia in 2024? What are you expecting?
Okay. We're expecting an exciting year. Well, we'll see how it all goes. Again, the idea, as I think Agnė pointed out a bit in terms of regional European economic forecasting, the idea that maybe the second half of this year could be a bit more optimistic with regards to the headwinds the transactions have been facing up until now with interest rates and inflation and these types of issues. An interesting factor here in Latvia is state involvement in activating, let's say, the economy. The state has stated that one way that they're tackling this project is to hack away at needless regulation and administrative burdens here in Latvia, and they're taking it sector by sector. Right now, they're working on the construction sector and trying to whittle down all the regulations that burden down that whole system. But maybe more noticeably, the government is also talking about listing several state-owned companies, at least portions of, say, minority shareholdings in state-owned companies on the Latvian Stock Exchange. They've been talking about Air Baltic, of course, has been talked about quite a bit. A possible IPO of Air Baltic coming up potentially next year or this year, but we'll see how, if everything fits into place for something like that. And the government is also issuing financing for, let's say, green projects. It's possible to get government-backed financing for these types and other projects. So these are positive trends, certainly with regards to potential transaction activity in Latvia. We've mentioned, of course, a possible sales scenario for Luminor. There's also Citadel has been mentioned. The Latvian government has also stated intent to lure. They feel it's important strategically to lure another international bank to Latvia. No specific indication of who this potentially could be. But anyway, at least the Latvian government has said that it's working in this direction. And again, as I mentioned in the slides regarding Latvia, we do have this new Indexo bank opening in 2024, if everything goes well according to the licensing. Potential activity also has been noted in the media with regards to joint ventures that the Latvian government and Telia have in the telecom sector with regards to the Latvian LMT, which is the mobile communications company, and TET. They're both co-owners in these companies, and they've been looking over the years at various ways of restructuring these, optimizing these. Maybe this is the year that something could actually happen in this regard. And again, as I mentioned in the previous slides, there could be some additional activity with regard to the Latvian gas sector and health sector activity that we're seeing. Again, maybe not huge transactions, but certainly activity in those areas. Potential consolidation in the health sector, private equity funds consolidating certain assets and potentially selling on to international funds. So I guess that would be sort of an overview of what we're looking for and anticipating in Latvia this year.
Thank you, Raimonds. And let's switch the slide to Estonia. Next slide, please. Yes, well, 2024 has definitely started moderately slower than the top years, 21 and even 22. Well, the main reason being the geopolitical turmoil, and that is still to continue. And it's not only the Ukrainian war what is affecting maybe us most directly, but it's also wars in different other places, in Gaza, etc., etc. And also the economic war, US-China, that is also having an impact on the global economy. The interest rates, well, they are promised to decrease, but very slowly. So probably will have more a psychological effect than economical. Well, it's different sources have, of course, pointed out it slightly different numbers, but it's close to 3 or 4 trillion euros dry powder, what is waiting to be released out to the world. And hopefully, well, the Baltics will, and including Estonia, will receive something from that. If not otherwise, then at least the highly speculated Luminor deal that will definitely not be local, it will be international because of the price tag that has been speculated so far. Well, in 2024, and that goes for Estonia, and I believe globally and all over the world, the well-capitalized players will continue to invest. And the only thing that is holding them back is, of course, the geopolitical aspect, waiting for the right time and maybe some good news. But also what we have witnessed is the price cap or the price expectations cap. The sellers, well, are still living in the past, maybe the 2021 prices, and the buyers, of course, are looking ahead because they buy the future cash flow, and those understandings have been in 2023 difficult to match, to be matched, and probably that difficulty continues in 2024 as well. Well, we definitely expect that the regulatory aspects will continue to have impact. It's not only the competition clearance, but also the foreign direct investment regulations, screenings, and of course the sanctions, etc., will continue to be observed and will have some aspect on the transactions. If not otherwise, then at least the transactions take longer time. negotiate and to take to the closing. Well, a lot has been asked whether Estonia and the Baltics as frontier countries, bordering countries with Russia, whether that has had an impact on our investments to our countries. And there have been, of course, different views, but I think that, even if we try to deny the impact is there, and at least to put it mildly, that the Baltic countries are not the prime investment targets in 2024. And unfortunately, that will probably continue. Well, if we are not targets of foreign investment, then is it a chance for local capital? Yes, maybe. We have seen that in Latvia, the local capital or Baltic capital was very active, and most likely we see it continuing to be active and taking advantage of the circumstances when the bigger global players are looking maybe elsewhere. The local capital definitely has a chance. This maybe stands for whether they will take this chance and whether we see a huge number or small number of transactions, but definitely there is a chance for local capital. Well, big question mark. Bankruptcies and the sale of distressed assets, always asked, but we didn't have them much during the financial crisis, and actually we haven't seen much of the trends nowadays last year and also in 2024 either. And with a tiny bit of optimism, I personally believe that looking at the amount of dry powder piling up, 4 trillion euros globally, and also the dry powder piling up at least in Estonia and different private equity funds and private companies, it only takes a tiny bit of good news and the tables will turn completely. We will see a very active 2024, but that is, of course, if we will have any good news. Agnė, your Mergermarket is doing a great job with the statistics, but you definitely have somewhere in London your crystal ball for 2024 as well. Is there anything that you can comment on top of your head?
Maybe just a few short notes, and they sound to me like a summary basically on what you said. I'd say in the Baltics it will be in line with long-term regional and global trends, showing the biggest activity in TMT and energy this year. And yes, there may be other active sectors such as financial. This may come up higher up in activity charts, especially by deal value, if Luminor deal materializes. Plus, European deal makers expect to see more consolidation in fintech space this year, and we have plenty of such players in the Baltics. Adding Citadel's unfinished strategic review to the mix, I'd conclude that this sector has a chance to show growth in 2024. And just for comparison, last year and in 2022, the financial sector was only 6th by deal activity in the Baltics. So plenty of room for growth. The other thing I'd add is that in Central Eastern Europe and more widely in Europe, also globally, equity capital markets are seeing recovery, or at least it is expected. So we have IPO candidates here, as mentioned, one in Baltic, but also other companies have publicly said that they considered this option, and Estonia is probably on top of the mind with Bolt example, also Estipost. So just these few notes from me.
Okay, thank you, Agnė. Yes, sector-wise, definitely to keep the eye on the DMT sector, which is continuously on top in the Baltics, and as we saw also globally. Well, financial sector is promising for 2024. By this, let me wrap it up and thank all the speakers and thank our audience for being with us this morning. And as said, the recording of this webinar, as well as the slides and the Baltic M&A Monitor report for 2024 will be sent to you by web links. Thank you, and looking forward to seeing you all and talking to all of you further on in 2024.
Thank you.
Thank you. Bye.
Bye-bye.
Bye.